The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Oh, man. Sorry about that, folks. I got some issues going on here, trying to get through this. Hey, welcome to the January 28th. The January 28th, magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. How about we have an extraordinary one? Yeah, an extraordinary one. And of course, you know the easiest way to do that. It's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check on the circumstance of these markets. We get to go figure out what the bulls and the bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial it, we've got you covered. You can always let those fingers do the walking. You can send me an email, steve@tfnn.com. Inside the subject heading, be kind enough to put radio show question, of course, in the Tiger's Den. Well, any ping will do. So let's go ahead and get this show started on magical, magnificent, marvelous Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, the Dow off 355 points. That's about 1.5% to the downside. S&P down 1.25% or 33 points. NASDAQ 100 off nearly 2%. That's 124 points to the downside. Russell 2000 is the strongest of the weakest, off only 0.7% or 9 points. Semis off 31. Trannies down 55. It's mean and green across the board. You know the drill, the fire drill out there, because the spot volatility index, that's up 13%, nearly 14% right now. It's up $2.43. She's trading at 1985. And if at the end of the day, as much as I hate to say that, at the end of the trading session, if we see a one-day rate of change greater than plus 10% out there, expect to see some type of overnight bounce, possibly a bottom. But you just got to wait till the end of day reading. You've got the April contract for gold. That's trading up $5. Silver up 6 pennies. Light sweet crude up $2. Leading the charge upside. Booking Holdings up $16.66. Sounds a little devilish to me. Equinix is up $7. Mercado Libre up nearly 7. Versum Materials up 5. To the downside, Amazon down $49, nearly 3%. Nvidia up 15%. With good volume behind that move, 46 million shares. It's off $24. Google's off 21. We have a request to go take a look at Google, so we'll do that. Intuitive Surgical off 15. ABI Med off $13. So plenty to look at. Of course, I want to look at what you want to look at. I see a question in the den. Let me read this. SR, as you see it, is the S&P 500 late January, early February, and decline another 2350 into April possible, following 2001 analog. So I don't know about the 2001 analog, so I will have to leave that to you at this stage, meaning I haven't studied it to know whether that is it. But the question is, in essence, are we looking at a decline into the April as a possibility? So let's answer that question the best ways that we can. So the first thing, let's take this one step at a time, if we can. Well, we can. We can't because I have control here with regard to what it is that we do. So let's take a look at what has actually transpired thus far today inside the equity futures contracts, because here you and I have reliable TAS market profiles, both the weekly and the daily. The weekly's on our charts that we're looking at right now. If you're watching us on TigerTV, those are the ones in green, and the daily are the ones in a bluish color out there. We're just going to call it blue. So now you've got the daily and the weekly. Now, John, to answer your question with regard to where is it that price is likely going inside the ES Mini with regard to its pullback, my initial target here is the bottom of the profile, which is 25.78. Now at 25.67, that happens to be the top of the weekly box out here. So maybe things are going to go further to the downside into your 23.50 area. But first we need to see support fall apart. And we haven't seen that just yet. As you and I scan this screen out here, meaning we're taking a look at the NQ, the Dow, and the Russell 2000, we haven't seen any key levels of support being broken. Now, it may only be 2,600 inside the ES Mini, because we can see that its bottom of its profile, that's a 25.78 level, and the center of the box, not near the center, but instead in proximity closer to the bottom than the top, is at the 2,600 level. So we have buyers lined up inside the ES Mini between we really got to call it 25.67 to 2,600 out there. So what is that, about 33 points out there, which is, ordinarily you'd say it's a fairly wide range. That's a heartbeat, right? You got the ES Mini is down 32 points right now. So that we're not at the low of the session out here. So that's just a heartbeat away from being able to provide you and I with that information. I would prefer to utilize that information to then say that at least price goes down and retests the lows. Stevie believes, and I don't just believe it, it's not belief system. Stevie knows that there's a high probability that based upon the closing in 2018 versus the closing of 2017, that we're going to go back and test those lows. I don't know if it's the high of the low. I don't know if it's the low of the low. I don't know if we make a new low out there, but it will set up the buying opportunity of a lifetime out here. But we've got to just stay focused. Take a look at, for example, John, and everybody else out there. This question came in from John inside the Tiger's Den. If you look at the Russell 2000, I pose this question to you. Because whereas the ES, the Dow, the YM, the NQ are each below the top of their profiles, signaling to you and I that there is a further retracement to come because they're back inside the range, so to speak, of the box. Why isn't the Russell 2000? Why isn't the Russell 2000 back below the top of its profile out here, 1457? Is it a signal that we're going to see some higher price before we see lower price? I don't know. What I do know, it's got to make you say, something to think about. Now, we can take a look at other aspects with regard to the S&P 500 out here. And one of those aspects would be just by taking a look at these charts. This is now the S&P. We've switched over to the S&P. And today, I pose this to you. Does today qualify as an island top pattern? It may. What does that mean? Well, that's a kind of a nasty, bearish reversal signal. At this stage here, I'll say the move on the S&P 500 to the downside, 25.86. Steve Rhodes with TFNN. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's off 328. So just to finish up our conversation here with regard to the S&P 500, we can see that there's a gap inside. So just from a candlestick charting standpoint out here, we can see that there's a gap between the high of Thursday and the low of Friday. And there's a gap between the low of Friday and the high of today, creating that so-called island. We can also see that price had traded into some trend lines. You've got some red diagonal channel lines on my screen. We've got some yellow trend lines on my screen. We've got some blue horizontal trading range lines on my screen, 2667. This is a daily time frame. It's a daily chart we're looking at. So price came up to resistance. Where did Stevie pull the number 2586 out of? Well, that's the bottom of that horizontal trading range out here, and that could or should be a level of support. So one step at a time. What I would do is say, hey, depending on where that spot. So the most bearish thing out here is that there's more of a counter trend rally this afternoon, and the spot VIX index does not close with a one-day rate of change greater than 10% out there. I don't know if that's going to happen. But the other side of that is, what is the other side of that? The other side of that is right now you've got the spot volatility index at 1969. The 50-day reading is at 2097. So even though I've switched over to the spot volatility index, it all is put together. You can't just look at one thing. Well, you can. You can look at anything you want. Stevie says don't just look at one thing. Instead, understand how these all work with each other to provide you and I with signals, not smoke signals, just simply trading signals out here. And when the spot volatility index is below the 50-day exponential moving average, it tells you, tells me, tells us there's plenty of liquidity inside the market. The only time the market is ever going to careen to the downside is when there's a lack of liquidity. And so the spot volatility index can't be one of those gauges in relationship to where it's trading and the 50-day exponential moving average. What's another tool that you can use for liquidity? I'm glad you asked that question, Certainly, we can take a look at high-yield bond credit out there. You can do that a number of different ways. One of those ways is by taking a look at the ETF HYG out here. Now, if we take a look at HYG, are we seeing anything significant? Any significant price erosion out here? Are we seeing any significant volume to the downside? Now, I'm asking that question. I don't know, but if I do put the volume matrix on here, the answer is no. It's down right now with about 9 million shares. You know, it was up at its highs with 36 million shares back on January 18th. 36 versus 9, even if we multiply times 2, we're at 18. It's kind of a light volume-ish pullback out here. So we're not seeing any type of huge erosions. Doesn't mean we're not in a volatile market out here. It just means we're not seeing all the signals that tell us that we're headed down just yet to those lows out there. So that's my call. I think we just have to take this stuff one step at a time. Now, with regard to, is it possible that we're going to see some type of bounce from here? The easy peasy thing to do, is just simply go take a look at the 30-minute time frame chart for the ES Mini. And as we do that, let me get rid of a couple of other things that were on there that were sent to subscribers this morning. Here's the one thing that you and I know. What we do know is that at 12 noon, you had that time to mark set up 9 count. By the way, if you want to understand this tool and how to apply it to your trading for your different time frames out there, then head on over. Oh, by the way, you can. This is easy peasy. Talk about easy peasy. Go subscribe to Mastering Probability. Do it now, pronto. It doesn't matter if you've ever been a subscriber or not. You've got a 2-week free trial, no charge to your credit card, no nothing until you get to day number 15 if you don't cancel out there. So it's totally open to everyone. You're going to learn a cool tool. We're going to talk about it here right now, because when this tool, the way that this tool works in helping to identify short-term tops and bottoms out here, is you pay attention to when you get to bar number 8, 9, or 10. Now on my screen, we don't go ahead and number bar number 10. We could, but we don't. We just know it's the bar after number 9. And that, if you're going to see a change in trend, you're going to see a high or low, in this case here, a low on one of those bars. Well, if you take a look at bar number 10, that was a low. Now what's price doing? Running right up into Stevie's red line. Is that red line important? Mucho grande important out here. So we can see that price is trading, which is about 26.33. We're now 26.34. Stevie's red line, that's the oscillator on change line out here. And if price moves above this area, you can expect another 7-point move at a minimum. 7-point move takes you back to 26.40. We'll call it 26.40.50, which is the top of its 30-minute profile out there. So this will assist you, or should assist you, if you are long or short the market out here with regard to what the short-term game plan is inside of the ES Mini out there. So yes, is there a possibility that we've seen the actual bottom for the day? Yeah, we're not going to call that the bottom for the day, but we would watch what happens here inside the 30-minute time frame. How would we call a bottom for the day? Well, you'd see it close above 26.40.50 out here, the top of that profile. Now, that profile can change. It's 1:24 in the afternoon. That profile can reform again between now and the close of today's session out here. What happens if we go below today's low? Well, then that tells you that we are not at the low of the day. A low, yeah, you needed me to tell you that, but it means we go much, much lower. And remember, we first began by taking a look at the daily time frame and weekly time frame of those TAS market profiles. That's ultimately where I believe that the market heads to. I believe also that in that same context that we at least go test the lows of last week. Now we're into the lows of last week. Well, I think we are. I just put up the weekly chart. What does that mean? And we're not too far away from it. The lows of last week would be 26.12 out there. So you could easily see this week a test of the lows of last week and a test of the high of last week. And so watch some of those things. The 50-day exponential moving average in its relationship inside the spot volatility index, as well as go ahead and watch that HYG is one of those ETFs to give you some type of signal out there. So hope that helps. And I know it was a long-winded way to answer your question, but I've had actually a number of problems with my system here, and so I've actually been trying to do some things on the side while I'm multitasking, and I hope my multitasking is at least making sense to you. So let's take a look. I mentioned that there were some questions that came in last week. Last week was kind of an odd schedule for me. And there were some questions that came in to take a look at some instruments out here. So one of those instruments is Google. And so let's go. I don't recall who requested that right now. What's more important is just simply seeing if we can go take a look at Google and give you a feel for what it's doing, what it's not doing out here. I'm just going to take a look at the daily time frame chart. Now, on this daily time frame chart, let me just turn the trend line tool off. And what we can see with regard to Google is that, and I think they're coming out with earnings. And with regard to earnings, what we can see is on Friday, price made it right up to resistance. Now, resistance here on this chart, you're looking at the red horizontal line. That's the top of the profile. The blue one is the center of the box. Look how close that is to the top. If you're not watching us on Tiger TV, you would know that. But the top is 1094. That center line is 1088. The bottom is 1047. You're trading in the box. This says that Google wants to go test the bottom of that profile, 1047. You're 1072 right now. Steve Rhodes with TFNN.com. Although I have no sound in my ear, I think we're at about break time. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we're taking a look at Google for one of our listeners out there, and I had mentioned that it looks like price wants to go hit the bottom of the box. Here's how you'll know. So this can assist you with your trading. This is how you should know. And I've got the weekly time frame chart up on my screen right now. Just trying to adjust a couple things so it can easily expand it. And what you're going to notice here today is you're going to notice that price is testing support of its weekly Stevie red line. And it actually is red, meaning on a weekly basis, the price oscillator is below zero. And if we see it close below that, that's already been tested, that's a pretty good signal that price is going to head lower. Now, you've got the TAS profiles, you've got the weekly profiles up here as well, and so that range is 1016 to 1031 out here. Is it possible that price just pulled back to support and it's going to move higher? And the answer is it is out there. So now you're going to say, well, Steve, come on. You can't have it both ways out here. I'm not trying to have it both ways. I'm trying to be able to communicate to you what the chart of Google is communicating to you and I. So the daily chart has a bearish structure, saying price wants to push lower. If we start to see it close below Stevie's red line on the weekly basis, maybe we call it 1072 even Steven out here, then that would say price should go back and test the bottom of the weekly. I'm sorry, the daily, which is 1047. Can it get below 1047? Well, most certainly can, because the bottom of the weekly, now we switch over, that's the center panel out here. This is showing us between 1016 and 1031, just like my other chart was showing you. That's a bullish structured box out there for Google. So I hope that helps you out. There was another request to go take a look at LBUY. I don't know what LBUY is. That's the Leaf Buyer Technologies Inc. out here. I don't know what they do, but you can see a huge breakout on the daily time frame. Of course, we could have said that on the weekly time frame back here in September 2018, and it gave up that weekly breakout big time out here. So what is it doing right now? I don't know what the request was. Oh, looking to go long. And this is for someone that likes the Jay Giles band. So got to be a good guy out there if you like Jay Giles. I mean, first I look at the purse. But if we take a look at both the daily and the weekly time frames, if you're looking to get long and strong, then in essence, you're basically about there right now, because the bottom of the weekly box is 74 cents. The bottom of the daily box is 75 cents. So you know where you would go ahead and put your stop. But I hate the idea, even the thought of trading a 75-cent stock makes me want to blow my brains up. But I would never want to do that. But I think this is what, if you're looking to get long this, then get long and do it as an unexpired option. Just take whatever risk capital you want, and if it's 1% of your portfolio or 2% of your portfolio, whatever that is, and use that and buy that number of shares. Divide 77 cents into that number of shares and stick it in your stick it in your desk or something like that. Your electronic desk these days. So bottom line is prices back at support, those support levels being the daily time frame bottom of their boxes, daily and weekly out here. Nothing on a weekly base. So I hope that helps you out. And that is on Leaf Buyer Technologies. We also had a request from Mike in Sarasota to take a look at Tilray. TLRY is the ticker symbol out here. What is Tilray generating for you and I? I think Mike has a call spread, if I recall correctly, but that could have been somebody else that has a call spread. So let's just look at Tilray and get a feel for what it's communicating to you and I. And really, I think, Mike, what you and I need to do is just simply stay with the daily time frame, because it's a relatively new IPO. This thing came out in July of 2019. And if this can close today above 75.68, and 75.68 happens to be the bottom of its daily profile out there, then we can say it's back in the range, and price ought to try to make a move to 94.63. Now, how long it's going to take to do that, that I don't know. But if it can stay above that level, that's where it wants to target. Now, along that path, if it is going to do that, it's got to deal with on a daily basis, even though it's just a few days ago, meaning January 15th, it's got to deal with the group of people that sold and or bought at the same time, right? If somebody's selling, somebody's buying Tilray, and that was between the price of $99.75 and $82. That's a pretty decent price spread out there, and there was decent volume as it was moving lower, 15 million shares. Today you're up with 2.3 million shares. So some of those folks may say to themselves, maybe that was a bad decision. Just give me my money back, and I'll go look someplace else. Now, the low that was formed in Tilray back on December 17th, which had 2.2 million shares, price had moved into that level, made a low with 2.4 million shares back on January 23rd. So about the same volume. You can't really say, in the case of Tilray, that the volume has dried up here. Today are 2.3 million shares. So it's not like it's really tested the low with light volume out here, but looks like this stock here can really be pushed around. Not a giganto float out here. Well, I don't know what the float is. I take that back. But the volume on average is around, a couple million shares out there. Mike, we're just simply going to say you close above the bottom of the box, 75.68. This thing wants to try to seek out higher price. You stay below 75.68 as it has for the last 1, 2, 3, 4 trading sessions. Then this thing wants to go test lower price, which could be the December 17th lower, and that's 64.06, trading at 79.44 right now. So that takes care of all of the requests from last week. So we got that done. Now, inside the Tiger's Den, there was a request to go take a look at the TLT. So let's go take a look at the TLT. That is being long the U.S. Treasuries, the long-dated U.S. Treasuries out here. And let's see, hi, Steve. TLT or IEF, if you get a chance, thank you. That's from our man Coda. And so if we take a look at TLT, are you long? Are you short? Tell me what you're doing. What's your time frame out here? Beyond that, if we take a look at TLT, here's kind of the message of the daily chart out here. And the daily chart shows you're long. So if you're long, what you're hoping for, hope is really not the great thing out here. You're hoping that this will get above 121.70, which is the top of its profile out here. The reason to be long, all right, Coda, and it's inside the TLT, a reason to be long is, look, this thing made that Rhodes momentum top out here. We've got that diagonal line that's being drawn inside the TLT to the upper right, and then you get that little bear sash candle out here. Let me get my cursor going. That was on the trading day of January 5th. So that was the reason to be long, short. And then the following day, price gets back inside its box out here, bearish in structure. Price gets down to the bottom, gets down below it. But here on January 19th, you'll see a number 9, a Gordie Howe. Tom DeMark set up 9. That's the signal to be long. But now price must get over 121.32, Stevie's green line, and then 121.70 for that trade to really work out. We'll be right back.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So, I'd mentioned that on the homepage of TFNN.com, or if I didn't mention it, I'm going to mention it now. If you go over there and under featured content, you click on Mastering Probability, you'll see that we're doing a new promotion here. And the new promotion is really the celebration of being named Market Timer of the Year by Timer Digest out there. We don't normally do this. When I say we don't normally do this, and that is give a 2-week free trial. 2-week free trial to anyone and everyone. Doesn't matter whether you've subscribed to Mastering Probability before. No charge, no upfront charge out there. The danger there is if you don't pay for something, you don't pay attention. But we're still just doing it. Just these 2 weeks out here, meaning it ends 2 weeks from yesterday. And so it's a great time to check out the newsletter service. Refresh yourself with regard to the new aspects of it, as well as learn about this time to mark setup 9 count out here. And we're going to go back to the weekly time frame chart for TLT, because what I want to do is I want to pose to Coda, help him be able to. So I don't want him to get married to his long position. Or I'm going to suggest that he doesn't get married to his long position out here. And what we have to do is kind of navigate what's the daily information telling us. In fact, so why do I say that? Well, first, if we come back to this weekly time frame chart out here, let me get the cursor going. You'll see that back on the week of February 23rd, 2018, see how that made that 8 count there, right? We know that the bottom, this was, well, price was moving lower, was going to make a low, or should make a low if the system's going to work on counts 8, 9, or 10. In this case, it was 8. Price on count 9 gets back inside the box. What does price do? Because that was the bottom, goes up and explores the top of the box. We come out here to the trading week of July 20th. The high was made the prior week. And what happens? Price goes and explores the bottom of the box out here. Then come all the way down to that time mark setup 9 count on November 2nd. The low was bar number 9. What does price do? Price goes up and tests the top of the profile. Now, it's hard to see here because I've got these other green dash lines on my screen, but it's right where my cursor is, Coda. You kind of see that? So price went up and explored the top of the box. Fast forward to now where we're at. Where are we at? January 4th, 2019, we get count number 8. Confirmed the following week. with that 9th count. And now the question I pose to you, Coda, what do you think the odds are that price goes back and tests the bottom of the current weekly profile in the 117 area? So you'll want to watch what's going on the daily to, I guess, give you that signal, or at least the bail signal, so to speak, out here. And we do have one of those Rhodes momentum indicator tops, as we said out here. So we've got the fight between the daily chart and the weekly chart out here. And prices below Stevie's green line on the daily chart. So just got to be careful out there. So I hope that helps you in navigating your trade on TLT. You may say to yourself, you know what? I'll go find something better to trade out here, because now what I've been able to point out to you says, maybe there's something better. Maybe that's all that it says. All right. I think that takes care of all the questions inside the Tiger's Den. If not, please repost another one out there, and we'll go to it. Let's go back to the email questions that have come in here. The next one came in from HD, and HD is taking a look at McEwen Mining, or I believe it's McEwen Mining, MUX. And if we go take a look at that, let's see, what's the deal out here? I'm looking to go long, but at a little bit lower price, maybe $165 to $170. So I'm good with the 165 price, because 164 is the bottom of the daily profile, not formed on Friday out here. The question is, will price get back to that level? Will it get back to that level? Interestingly enough, if you take a look at the daily time frame chart out here, and we take a look at when price made its low, was there any signal that we could use? Steve is going to go with the answer of no on the daily time frame. What do I see on the weekly or the monthly? Don't really see anything there either. Would I go long now? The answer would be no. I wouldn't do that. I'd pay attention. So here's the deal, HDTV. You can see that price is above Stevie's red line. So that should be a level of support. That's at 171. You're at about 175 right now. If you see it close below 171, you're going to go, or it should go back, and it should test the $164 level. That's the bottom of that daily profile out there, which would be cool if it could get down there, because you'd want to make sure that it's moving down with less than 1.3 million shares. That was a January 23rd volume out there, a little doji candle. Price closed higher the next day. So that was a little bit of a positive. And now you're just inside the range out here. So if you're looking to go long, watch 171. Below that says you're looking at 164. A close above the top of that box of 180 says this thing heads back to the highs from January the 3rd out here. We're not really getting the signal that that's what's going to take place just yet. Volume today, 874,000 shares, kind of going against 2.5 million shares to the downside. So not a lot of enthusiasm inside of McEwen Mining. Hey, had a nice day on Friday, but everything should have had a nice day on Friday with regard to the mining equities out there, but only about 1.6 million shares. That wasn't a huge volume. That wasn't a beautiful signal. With regard, and HD, I'd ask you the question, why McEwen Mining? Why McEwen Mining? I don't it doesn't look like a great stock chart out there. Here, take a look at, for example, Franco-Nevada, right? We just look at Franco-Nevada. We look at trend lines out here. What this thing did last week and the week before was moved above a level of resistance, a monthly chart, albeit moved above a descending trend line. We're not seeing that in McEwen Mining at all. So why wouldn't you go with something stronger, so to speak, if you're looking to get in? I know you'd like to buy a bottom and so forth. I kind of get that, but it's misbehaving, so to speak, out there. Whoops, did I do that? No. So just think, if things were to turn to the downside, you'd probably get slapped silly out there, and I don't want you to get slapped silly. So I'd say be careful. Maybe it's not. I'm not necessarily saying go trade go in Franco-Nevada, although I am saying it's a heck of a lot better chart to me than McEwen Mining does out there. But maybe look around for something that looks a little bit better than MUX does out there. Earl writes in and he says, "Hi, Steve. Are interest rates on long bonds going to go up near term and hold stocks from rallying? Oh boy. Okay, so now that question has to assume that Steve believes, then wants to ignore my chart patterns out here. That's, in other words, somebody says to me, hey, you know what, Steve-O? Interest rates are going up, and therefore the market cannot go up. And that is something I cannot buy into, will not buy into. That's a story. And I know a lot of people are convinced by that story, but that's a fib. And I'm talking Fibonacci. Steve Rhodes with TFNN. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Hey, I don't ever want to just say something and somebody out there thinks that, I'm just pulling something out of my, you know what, out here. And the reason, Earl, that I cannot buy into that belief system is because my eyes don't lie. Your eyes don't lie. Our eyes don't lie. All we have to do is come back and just, as an example, we go back historically and take a look at this too, but here is the 30-year T-bond interest rate. And we can see, if we just simply go back to a gentler time in life, July in 2016, we can see how this had bottomed and rates have been going higher ever since. And if we take a look at the S&P 500 at that time, which was priced around 21.49, we're at 26.38 right now, it too is higher. Higher interest rates are not bad for the stock market. Not as much as all those blabbering fools on the main stations out there want you to believe. They have to sell one thing and one thing only to get you to tune into their stations, or so they believe. They've got to sell you on fear. I'm going to sell you on opportunity. I'm going to sell you. I'm not going to sell you on anything. All we're going to do is we're going to come back and we can test these theories to see if these correlations really are going to impact anything. And so the answer is the stock market can move plenty higher with long-term treasuries moving higher. After all, they have for the last several years. This is a monthly chart, by the way, that we're looking at it. So they've moved higher since July of 2016 out there. So hopefully that helps you out, folks. Thanks for staying tuned. Stay tuned, though. Your favorite polar bear, David White. My favorite polar bear, David White. He's up next. Hey, don't forget, get over to the homepage at TFNN.com. This opportunity is not going to last long, which is a free trial to Mastering Probability, no charge on your credit card or anything for the next 2 weeks. Plus, you got great workshops that are archived out there. Learn about the power of 9. I want you to learn that. It's a cool tool. Stay tuned, folks. David White's up next. Tom O'Brien, 3 to 5. I'll be back with you on Terrific Tuesday. Take care, and thanks for being here.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.